After the OPEC Plus alliance announced its decision to cut oil production by 2 million barrels a day, oil prices extended gains and finally consolidated above the level of $90 per barrel. This decision came as a complete shock to the White House. Biden expressed disappointment with that move and called it short-sighted. It goes without saying that the U.S. does not need elevated oil prices during the race for U.S. presidency. Meanwhile, OPEC members agreed to move to meeting every 2 months instead of monthly meetings. Thus, output volumes will remain low at least until the December meeting. Besides, the EU agreed on a new package of sanctions prohibiting the shipping of Russian oil to third countries above a capped price, which came into force yesterday. Given that reality, oil prices have every chance of returning to $100 per barrel. Investors are highly concerned about the possible energy shortages caused by these restrictions. After all, the Kremlin said that the country would stop selling oil to countries that impose price caps on Russia's energy resources. Therefore, the quotes will hardly lose significantly until these sanctions have any effect. From a technical point of view, Brent crude oil futures gained upside momentum and overcame the resistance level of 93. That's the asset has added about 13.5% in a week and a half. If the price stays firm above $93 per barrel, the volume of long positions will increase further, and in this case, the benchmark will hit towards the area of 95.50 and $100 per barrel. The situation with the gold remains unchanged. The yellow metal is still trading above $1,700 per troy ounce. Although the prospects of further interest rate hikes by the Fed and the ECB is putting pressure on the asset, this is not enough for its sharp decline. As soon as the central banks move from words to real action, the metal will most likely go down. In the meantime, after touching the resistance level of 1,730 per troy ounce, gold futures slowed down the pace of the upward cycle. As a result, the metal pulled back and then moved sideways. According to technical analysis, to resume its bullish run, the quote needs to consolidate above the level of 1,736 on the 4-hour chart. A scenario suggesting a downward move will be relevant after the price fixes below the $1,700 mark on the 4-hour chart. And now let's take a look at the USD rupee pair. Of course, investors were alarmed by the fact that Western sanctions aimed at capping the price of Russian oil came into force. As a result, the ruble lost value a bit. However, if these sanctions have no effect, the ruble will quickly return to its previous values and resume its gradual uptrend. However, this will take time, so the dollar is expected to keep trading around 60 rubles within the next few days. And this is all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.